Hello everyone, welcome to the Trendline News channel. In this video, we're going to look at how to use the breakout scanners that I use, which are based on CCI. Now, CCI is a very good indicator that I've been using for the last many years. So, if you haven't really understood what CCI is, I will also discuss about that indicator so that you can learn more about that. But the focus is to make you understand, which indicators to use for what and what are the rules that you have to use to identify the stocks that you're looking at from these scanners. Okay, so let's take a look at two of these scanners. One is I'm going to look at the weekly CCI scanner, which shows you long-term breakouts, and we'll also take a look at CCI, short-term breakouts or probably breakouts which you can do for swing trades or short-term swing trades as well. Okay, so this is the scanner that I'm using. So the link for this dashboard would be available in the description. You can also take a look at that and let me know if you have any questions. But primarily the dashboard that I have has 4 indicators. Now, each indicator has its own use. Now, for example, there are 2 indicators which are more of breakout scanners, which gives you stocks from a list, from a group of stocks, basically from the entire market space, right? So here, the first one, I'm looking at a long-term breakout scanner, right? So basically, I'm looking at CCI weekly 34 period. So I'm looking at the weekly charts and I'm looking at CC 34, and if that indicator crosses 100, then it will show up in this scanner over here. Right now, for example, here in this week's, I had a lot of stocks like Power India, Asahi India, Century Reply, and all these stocks were breaking out on the weekly charts, and the CCI was crossing 100, or they're about to break out on the weekly charts. Right now, that's the first scanner that I'm going to look at. I'm going to teach you how to apply some rules, and I'm going to show you what this scanner actually contains. Okay, so this is logic, or the logic that I have coded in the scanner. So here, if you see, it is a simple one-line condition which says weekly CCI 34 crossed above number 100. Now, this primarily means that the stock is entering bullish territory, and since I'm using the weekly charts here, and since I'm looking at the last 34 weeks, it would mean that the stock is breaking out probably from a very strong consolidation of more than 6 months or probably more than a year. Remember, there are some rules which we'll look at shortly, but this breakout here, you could use it for investment perspective, or could you use it also from a positional trading perspective. Now, positional trades can be held from few weeks to few months, or probably many months up to a year as well. Depends on how long that stock is trending up. But here are some rules that I want to discuss today. Now, from the scanner, whatever you get, you should focus on stocks coming out of a minimum 2 to 3 year downtrend. Now, remember, we're talking about investments or positional trading. So you need to focus on stocks coming out of a minimum 2 to 3 year downtrend. And the longer the duration, the higher the chances of you getting greater returns. Now, for example, if you're looking at a stock which is coming out of a 2 year downtrend, now probably that stock has already been up, then it went to consolidation 2 years, and then now it's moving again higher. Right now, since the consolidation is just 2 years, the stock might probably do well for a few months. But if a stock is coming out of a trend, let's say of a 5-year downtrend or a 10-year downtrend, or if it's coming out of a 15-year consolidation like we saw in Astra Micro or Thermax in last week's video, now these stocks will have much higher returns, and probably they might trend for a few years, if not for a few months, and they might give you much higher returns from an investment perspective. So from an investment perspective, if you see a stock which is breaking out of a 3-year downtrend versus a stock breaking out of a 10-year downtrend, then definitely you should be going for a stock which is breaking out of a 10-year downtrend. Now, that's the first rule. Remember that. The second rule is the stock should also have a massive increase in volumes when it's breaking out from whatever time frame it is, but also look for companies which are having a steady increase in sales or profit, or at least there should be a slight uptick in the sales and profits in the last few quarters, if not for the last many years or so. Now, why do we look at this? We are looking at this because a stock company which is increasing its profit in the last few quarters or probably in the last few years means that this company is probably going to do well, and that's why the stock is already heading higher, sensing that change in the fundamental parameters, right? Now, if the OPM operating margin is also good, that will be excellent. If there's an increase in operating margin, let's say the company has been doing an operating margin of 10% in the last 5 years, but suddenly this year they're doing an operating margin of 12%, which is 20% increase, which means some of the operational efficiencies or some of the operational cost cutting that they've been doing is working for them and it's improving. And remember, these companies will tend to increase operating margins, and the PAT will increase drastically, especially if the economies of scale kick in. And that's why I'm saying if operating margins increase, that's definitely a good sign for the company, and you should keep that in your watch list or invest in them. The next is the debt to equity ratio should be less than 1, which means they should literally have no debt, or slight debt is fine, but if they have no debt, that's excellent. Go for these companies, and if you see these combinations, then that's pretty good. Next, In your technical scanner, if a stock is breaking out from a horizontal breakout, right? We discussed this in the past. So if a stock is breaking out from a clear horizontal resistance, then that will be excellent, especially if that horizontal resistance is more than 2-3 years. That's going to be a fantastic pick from a position trading perspective. So that's the first scanner I want to talk about. But before we move to the next scanner that I want to discuss today, don't forget to watch this video, which is the horizontal breakout strategy, which I just mentioned. These kind of stocks are breaking out from 3 to 5 year horizontal break resistance, and if they break out, they will do really well, and it has a very high probability, sometimes even to the extent of 70-80%, and they might do really well if you have some patience. Okay, so let's take a look at the next scanner for today, which is this scanner, CCI daily crossing 100. Now remember, this video objective is to just discuss these two. I'll make a separate video on the other two. So this one is more from a short to medium term perspective. Right now, this is more from a long term, and this is very short to medium term perspective. So let's take a look at what this scanner is about, and also the rules that I want to discuss with you. So this is what the scanner has. It has latest CCI 34 crossed above number 100, which means I'm looking at a daily chart, and I'm looking at probably the last 34 days or last, we have 20 working days in a month. So probably last 2 months trend I'm looking at. I'm looking at if the stock is breaking out, about to break out, and is entering bullish territory on the daily charts for the last few months. Right now here, I'm not focusing on 3 to 5 years, but sometimes you also get stocks from last 3 to 5 years. If you find them, as I said, look at the previous rules and don't forget to invest in them. Now, in this case, how do you pick up the stocks? Now, in this case, I'm looking at pure from a very swing trading perspective. Probably a few weeks is max of what I want to hold, or probably a few days. I'm looking for some really quick gains, or probably a 2 hour, 3 hour trade, 2 times or 3 times the risk I'm looking at, and I'm going to exit the stock. Now, if you're looking at that from this perspective, then these are the rules that you have to follow. Number one, focus on stocks coming out of a minimum 2 to 3 month short-term downtrend. Right now, these stocks should already be in uptrend in weekly charts, and they should be going sideways, or they should be going down for the last 2-3 months, and now they should be again coming up and breaking out with volumes. And the longer the duration, as always, as obvious, the higher the chance of greater returns. Now, stock must be in weekly uptrend. That's the second rule. This is a must, because if the stock is not in a weekly uptrend, but if CCI also comes up, it could mean that the stock is in downtrend and it's giving a very short-term breakout, and you might end up making losses in that trade, and the probability of you making losses is higher. So look for stocks which are probably CCI also is above 100 on the weekly time frame, plus CCI is also going above 100 on the daily time frame, or the stock should be in uptrend on the weekly time frame, right? So look for increase in volumes. So breakout, it's always, it goes without saying that volumes will have to accompany a breakout, be it on daily, be it on 5 minutes, 1 hour, or any time frame. Without volumes, the stock is not going to go up. So there should be at least a slight increase in volumes on the daily charts, and if you're looking for a swing trade. Now, below things are optional. The same things I mentioned in the weekly chart is what I'm going to tell here, but these things are optional. You don't have to really look for good quality companies. If you're doing a swing trade, you can also go with companies that are doing not that great, right? But if they're doing well, then it's going to give you an added advantage, and it's probably also going to increase your probability. And also, as I said, horizontal breakout, we saw in today's example as well, in Tata Coffee, that there was horizontal breakout. So if you see such similar breakouts in even short term, it's a very good setup to go ahead and buy these stocks. Okay, so since these are CCI indicators, I also want you to watch this video and see if you understand. If you don't understand what CCI is, this video will definitely give you a good understanding of it. The video should be link should be right on the top. So that's it for today. If you did like this my scanners, and if you want me to also talk about the other two scanners in the next video, do subscribe to the channel and do let me know in the comments, and also like this video. So I leave you here. Take care, stay safe, and trade safe until I see you in another video. Bye bye.